A little something about Raymond. He's an investor in stocks and rooms. He wants no money from you, no bait and switch, nothing. Here's what he's going to do. He's going to log into his personal account, share real estate property documents, and give you suggestions on what to read.
I am Raymond from Stocks and Rentals, the YouTube channel, and I am here to break down the different type of investors. Before you invest, you have to know what type of investor you are. You cannot just copy any old person on YouTube, and that includes me, and I am not old, and do what they do, because you might be in for a big disappointment. You have to determine this. If you are conservative, moderate, aggressive, or even a day trader, and I will help you. We will start off with conservative investor, and I do want to tell you this. This is a video. Please pause the video. I got a lot of stuff in these slides, and I don't want to make the video super long. So I'm going to do a highlight, but please pause the video like I said. Get all the details, make the correct decision, and get paid. Conservative. When I hear that word, I think of somebody like this. This is Urkel from back in the day. And if you grew up in the hood like I did, you didn't see anybody walking around like this. I don't think this conservative person could make it in the hood. But we're going to talk about conservative investors. Conservative investors have a very low risk tolerance. They do not want to lose one penny. They would typically invest in CDs, money market accounts, bonds, and if they do buy stocks, it's the big boy stocks, the stocks that they're pretty confident will not go anyplace, like AT&T and General Electric. They do not trade that often, and they hold these investments for many years. So once they buy a stock, they're just going to ride it out. I would say in terms of risk between 1 and 10, I would say the conservative is anywhere between 1 and 3. The pros are you will not lose any money. The cons, you ain't going to make too much money. If you are a conservative investor and you're saving or investing for 30 years and you want a nice nest egg when you get in your 60s, when it's time to retire, I am sorry to tell you, you won't have what you need to live comfortably. Moderate investor. This is the image that I think of. This is somebody who has style. They're not flashy. They're not conservative. They just have a good style about themselves. You might be able to look at this picture and see your image. Moderate investor. They will take some risk. They know that the money that they put in the stock market can be lower than the initial amount, the principal. If they throw $1,000 in the stock market, they know in a couple of months or a couple of years, it could possibly be below the $1,000 they initially put in. They will typically invest in ETFs and mutual funds. They will make trades. They might make a couple of trades every quarter. So maybe in a year, they're doing about 10 trades or so. If I had to rate this type of investor for risk, I would give them anything between a 4 and a 6. Over the long term, they will expect a profit of about 10%. Where did I get that 10% number? That is close to the annual stock market return since the stock market has been going in the United States. Pros. If you are a long-term investor and you stick with it, you will make money. You will make a profit. I guarantee it. Cons. The stock market will always have ups and downs. You have to expect to lose some money. This is different from a conservative investor. A conservative investor probably will not lose one penny, but they ain't making nothing either. This is probably where you want to be if you are starting out. Here's another image of a person. This person is aggressive, in my opinion. He is jumping out of a plane. How many of you will be willing to jump out of a plane and put everything 100% on that ripcord and that parachute? I know it ain't me, but this is the image that I get when I think of aggressive. Aggressive investor, they go hard and they're willing to take wild swings in the stock market. If the stock market or their portfolio dips by 50%, by half, they not tripping on it. They're saying, hey, I'm going to stick with it and it's going to come back. Almost every type of investment in their brokerage account will be individual stocks. They might have a couple of index funds and they ain't going to have no bonds. You might even see commodities like gold and silver in their brokerage account. If I had to rate this type of investor, I would give them anywhere between a 7 and 9. And you probably can make a profit greater than 10%. So that's more than the moderate balanced type of investor. But, here's the but, only if you pick the right stocks. Pros, you can make a whole bunch of money really quickly if you pick the right stocks and sell at the right time. Cons, it is impossible to time the stock market. Who knows when it's going to go up? Who knows when it's going to go down? And who knows the exact day and time to sell? I know I don't. Here's an image of somebody that I think is extremely busy. When I see this image, I think of a day trader. She's looking at her phone. She has 2 monitors. She has a calculator on her table. She's got an ink pen in her hand. She is busy. She's concentrating. That's what you have to do if you want to be a day trader. Day traders, their job is to stay connected all day to the stock market. So that means if you're a day trader, you need a lot of time to sit down and be glued to your computer and you're just watching the stocks as they go up and down and you're making a determination when you want to sell. Things are going to go very, very fast. You need to be educated. You can make about 50%, maybe double your money in one day or even a couple of hours by being a day trader. And guess what? You can lose everything the same way. A couple of hours, a couple of days, you can go down 50% or you can go broke. I know nothing about day trading. If you think you want to do that, you need to find a different channel. Stocks and rentals is for beginners. I do not mess around with day trading. Here are the pros. The pros, if you need money quickly and you have information that other people don't have and you can stay glued to your computer, to the stock market, and you can buy and sell really quickly, you can get paid. Cons, you can lose big, you can lose everything. That's all I got to say about day trading. Do it at your own risk. My investment style. I started off as an aggressive investor when I was young. So when I first learned about the stock market, I was pretty aggressive. I was throwing my money in. I was 100% stocks. I didn't have any index funds. And the reason why, I said, hey, I'm young. I'm 20 years old. I'm 21 at the time. I got a long time to go. I'm saving for retirement. I can ride out all these ups and downs and craziness of the stock market and still be good 30, 40 years from now. Once I started learning the stock market and started making money, I didn't want to lose my money. So I kind of shifted to a moderate, balanced type of investor. So I'm like, hey, I'm doing pretty good at this. I'm making some money. Let me switch the game over. I went to moderate. I want to tell you guys this. No matter what type of investor you are, you want to diversify your investments. Even if you're an aggressive investor, you still want to diversify within that sector, meaning you want to pick different type of aggressive investments. If you're a conservative, you're going to balance that out. You're going to pick different type of stuff. And if you're in the middle like me, moderate balance, you're going to be all over the map. Before I close this out, I want to remind you, rewind the video, pause the video, check out the 4 different type of investors, read the text, You will not be a millionaire if you only want to look at videos. You got to read too. I'm Raymond, Stocks and Rentals. Peace.
Come on, push the button.
Yeah, come on, push your button up.
Push the goddamn button.
Push the